Do you think the most overlooked deduction is the business's miss?
Ooh, that's a good question. My favorite one is the Augusta rule, which a lot of influencers talk about. But you can rent your home to your business, and you can do it up to 14 days a year.
This is generally true. Let's keep watching.
So I got a rent expense to my business. I got rental income as the owner of the house or even the house that I rent. But if I rent my home for 14 days or fewer per year, I don't pay tax on that. So we rent our home for client events, to shoot content, to do strategic meetings. You look up comps, right? There's websites out there to do this, or we do it for our clients. And let's say a moderate house that if you were going to go and rent a conference room, it was going to cost you $1,000.
You don't price your house based on what a hotel conference room costs. Those are two different markets. The IRS doesn't care what a hotel charges. They care what a home would reasonably rent for in a similar situation. All right, let's get back to the video.
And if I do it 14 days a year, that's a lot, that requires some plan. But that's $14,000 I can pull out of my business tax free.
Yes, the Augusta rule exists. And yes, rental income for 14 days or fewer can be excluded personally. But this does not mean you can just move money from your business to yourself and call it tax-free. For this to work, it has to be a real rental. That means a legitimate business purpose, a fair market rental rate for your home, proper documentation, and correct treatment on the books as rent and not owner draw. This is what I see later when the IRS reviews these. They don't usually argue the rule, they argue the facts. If the facts don't support the rental, the payment gets reclassified. Once it's reclassified, it no longer is tax-free. It becomes taxable income plus penalties and interest. The Augusta rule can work, but it's not free money. Before using it, make sure it's structured, priced, and documented correctly.